Hello, happy Thursday. Hope everybody's doing well. We have the Fed obviously very clearly back in focus here. Seems that the Fed really these days is the market. Seems like this is all that really matters lately. So we're going to be spending a lot of time breaking down the recent Fed meeting just yesterday on Wednesday. My name is Brandon Steele, financial advisor with Mainsail Financial Group here in Bellevue. And our goal every Thursday is to bring to you the market news, and especially this week here, maybe weed out a bit of the noise with all the Fed speak and analysis that has been happening lately. Before we get to that, going back to last week on Friday, we had consumer price index up 1% for the month, and I believe it was 8.6% year over year. And we saw a huge, like, markets sold off. We saw huge concerns around inflation and thoughts that really the Fed was going to hike more than the 50 basis points that they had been, let's say, forecasting or foreshadowing for a while here. So before we get to what they did, for those who know, maybe a little spoiler, they did go faster. But listen, inflation is here. Obviously, this spooked the markets. It completely revamped what the Fed was thinking about doing. But this should not be a surprise. I mean, inflation is here. It's going to be here. Even with these rate hikes, it takes a while to work their way through the system. So, I guess it seems strange to me that the higher inflation data is a surprise at this point, because we obviously have issues. We've increased money supply significantly. We do have supply chain issues, but it's not just that. And so these two things in combination leads to what we're seeing with higher prices. So before I got into the Fed breakdown, I just wanted to kind of share where all this came from. And really last Friday is where it all started. Then we had retail sales down about 0.3%. So the question, I guess, is inflation starting to have an impact? We'll have to kind of wait and see a little bit here, but that is an important number. And in fact, our question of the week ties in very well, which is, how does inflation impact the markets and the economy? So I'll come back to that here in a bit. But obviously, the bulk of our time today is on the Fed. So Fed meeting Fed decision on Wednesday and press conference right after. Clearly, they did decide to take advantage, I believe, of what they kind of thought maybe the market had already priced in with a 75 basis point hike. So they did exactly that. Fed raised rates 75 basis points. They essentially said that they do not expect this to be common, but they said seems most likely that they'll kind of follow this 50 or 75 basis point hike agenda, I guess, in the meetings to come. They had shared that their estimates in the committee were that the Fed funds rate, which is what we're tracking here, might be somewhere 3.5% to 4% next year. To have a proper Fed funds rate, I think, is what they had kind of shared. So what does this mean moving forward, right? If they're going to project where they see the Fed funds rate maybe at the end of the year or beginning of 2023, you can kind of back up and say, okay, what might that mean in the coming meetings? So if that is the case, basically we're at 1.75, I believe, right now. So basically what that means is that if that is the target, it essentially means that the average hike we will see from here on out, there's 3 more meetings, is over 50 basis points. It's the 0.667. So we'll see what happens here. But obviously, if they are correct in their forecast and where they actually want to get by 2023, you can kind of back up and get a sense of what may happen in the coming meetings. So we'll obviously keep an eye on that. The Fed will obviously continue to be in the spotlight here for a while to come, but something important to watch for sure. The thing I kind of find interesting is, here we are in this just crazy inflationary environment, and I can't help but to think back maybe a year or so ago when the Fed was actually trying to increase inflation. Remember, there was this target 2% inflation rate. For whatever reason, it was believed that a higher inflation rate would be good for the economy, which, I don't know that I really feel the same way or understand where that was coming from. And now here we are, right, trying to increase inflation, and now we've way overshot. So the Fed is in a very, very tough place, because not only do we have this, but obviously with everything we've seen in the economy, things certainly are a little further along in the cycle too. Basically, through the conversation on Wednesday, the markets were up big. They reacted great to the Fed's conversation. It bounced around a lot, but through the end of the day, markets were actually up pretty big. And then here we are on Thursday, and markets are not up big. Markets definitely digested what was said, I think, and ended up that I don't think the markets were very happy with the 75 basis point hike. So we will see what's to come. The next meeting is in July. Obviously, we'll be paying very close attention to that. But one thing I will mention is that he had alluded to what they might do as far as a hike moving forward, but he very much this time skated around giving a direct answer. Previously, he had said 50 basis points for months. And so, we were all kind of led to believe that was going to be the case. He said he wasn't going to surprise the market, all that. And here we saw a higher hike. So I think he's scared to do that this time and kind of put himself into a corner. So, we may not get as much a possible clarity on what's to come. Obviously, that clarity fell flat, but you get the idea. One thing I thought was also very interesting is that the Fed, coming back to that inflation conversation, they said they see inflation coming down sharply. To me, that seems very out of tune with what we're seeing and why inflation is here. But I think that's why they feel like this hike was so important. And then they also showed that there were some indicators that real GDP growth picked up this quarter. So coming back to the recession conversation, if that is the case, if we have GDP growth, obviously that kind of takes that off the table. But obviously, they it's not like they have the crystal ball on that either. So we'll have to wait and see. Coming up, markets are closed on Monday. So if you have the day off, enjoy your holiday weekend. We also have existing home sales and jobless claims coming out next week. A little bit lighter data week, which is probably nice after everything we've seen recently. A little bit of a breather before we kind of head into earnings season coming up here shortly. Our question of the week this week is how does inflation impact markets and the economy? And really, this is a really good question. And really where it starts is that really our economy is very, very heavily reliant on the consumer. So earnings, GDP, a lot of what we do here in the US is based on the consumer and their ability to spend and buy and invest or whatever the case may be, right? So that is the biggest impact. When we have this inflationary environment and all of a sudden gas is, $100 to fill the tank, number one, they may take less trips, right? That's the obvious one. But number two, if they do need to drive and the food's more expensive and they need to put food on the table, what can happen is some of the other items start to get pulled back, right? We may not spend as consumers on, the extra trip, which seems to be the exact opposite right now with the world opening back up. But maybe a better example is we may not buy the extra pair of shoes because we need to put food on the table. So when we see this inflationary environment, what happens is priorities start to shift. And the stuff that you would have no problem paying for before maybe becomes a little bit less of a priority to make sure that the needs are taken care of, right? So that's really the impact here. And that trickles all the way through to companies, because let's go back to the shoe example. If you're Foot Locker or some company that sells shoes, let's say maybe Nordstrom's, that starts to have an impact, as you might imagine, on your profits and sales and all the above. So it just kind of works its way through the entire system, and that's why inflation can be so challenging. So hopefully that's helpful. Obviously very relevant given the Fed conversation recently. We hope you have a great holiday weekend if you have the day off, and we will see you next Thursday at 3 p.m.